Okay, it's Tuesday the 10th of January. It's the first live trade since the Christmas holidays, so I hope you all had a great Christmas and New Year. We're on the Australian dollar, US dollar. Now, usually with the live trades, what I like to do is link them up with the review video and analysis video of the same date. So on the Tuesday, I do the FTSE review and analysis video, and I tend to take the live trade off of that market. However, today on the FTSE, we are at all-time highs. The market has been very, very frustrating today. It has not produced any nice signals. We're coming up to 10 to 3. So I am now on the Australian dollar, US dollar. It has set up a nice signal for me. I've already missed a few this morning by focusing solely on the FTSE. However, we are now into a short position after the 245 pin bar. This market is in an overall downtrend on the higher timeframes, and we've gone over that in the Sunday analysis video. And basically today the market has continued that downtrend. It's been making lower highs and lower lows. It came all the way down to 7,335, and then we have seen a relief rally. Now the relief rally has came up into a key level of resistance where I was happy to get into a short position. Now I'm in a short position, however, the market has just broke up fairly strongly in comparison to the price action of the day. So the price action of the day, we've basically been making nice small trending moves down, and then we have broke up. We have broke above. Oh, let me just get the rectangle. The previous swing high. For that reason, this trade that I have taken is somewhat of a scalping move. So I am not looking for a big move on this trade unless price breaks down very, very quickly. What I am looking at instead is basically a move down to 7364.3 and these management areas right here where potentially I will exit. Now, when trades like this set up, it was very, very rare that I do what is called, or what is for me, scalping on the 5-minute time frame. But when I do, all I do is look for much smaller moves in the market, have tight stop, and have tight management points. Let me just get rid of this arrow. Okay, so that's the trade. That is what I am looking for. We will see how it gets on. I'll likely pause the video, turn it back on when anything's happening. I'll talk you through when I'm making any decisions, when the market starts to move one way or the other also. Okay, the market is down toward the target. I'm just looking for an exit now on the trade, just watching the candle as it's forming. I'll likely exit at the completion of this candle or just before. Okay, so it popped up a little bit there at the close of the candle. I only got out with around about 6.5, 7 points. Entry was down here, stop was up here. Risking 10 points, so around about 0.7, 0.75 to 1 risk to reward. Now, okay, sorry guys, I just had to answer a couple of emails there. There's a few things worth going over in this trade, and what I'll also do is I'll take you through the market quickly as well, because the trade from today, as I've mentioned, is not lining up with the FTSE 100 review and analysis video, which it usually does, and the reason for that is because if we look at the FTSE, just quickly, and we are up at all-time highs. Up at all-time highs like this, there's only a few areas where I'm willing to trade from, and the market today, it was just very, very frustrating, and it didn't give very good, very clear signals that I was willing to use as an entry. And you can actually see the market is rallying up once again. We're coming up towards the 7,300 level. Let me delete this alarm in case it goes off whilst we're doing this video. Okay, so Australian dollar, US dollar, we actually had a couple of nice signals earlier. One at 8.35, down into the zone below. One at 10.20, up into the zone above. However, as mentioned, I was watching the Australian dollar US dollar because I like to tie the trades in with that video. Now, the market today. Well, the first thing is when you're trading lower time frames, you should always have an idea of the overall trend of the market you are trading. And by that I mean the higher time frame trend, you know, the daily, the weekly trend. However, when you are trading on lower time frames, that trend can be different. And you have to be aware of that because it is always a good idea to trade with the trend. And for the majority of trading opportunities, trading with the trend is a good idea. However, if you're taking the trend off of higher time frames and then trading on much lower time frames, the trend can be different. On the 5-minute time frame, you will also get trends that can be completely opposite to the higher time frame trends. So today, when the market opened, we can see we're clearly making lows, lower highs. This market is very clearly in a downtrend. Then what happens? We spike up very, very strongly. We break the previous swing high, which if you are watching a trend, basically is telling you to pause. It's basically telling you to wait and just see what the market is doing, because potentially the trend is over. Potentially it's either moving into an uptrend or it is now moving into a period of chopping sideways. Now, when this happened, you can see it came up very, very strongly. It came into what I had identified as a key resistance area. Because it was a key resistance area, I was willing to look for the sell position. We got one right here. As mentioned, I took it more as a scalping position, meaning I was only looking for a smaller move. The reason for that is because we'd just broken above the previous swing high. I knew there was potentially going to be support here. I knew that potentially the market was changing its short-term trend. So for me, a move down into these levels was all that I was willing to risk. Now, when the market moved up like this, one of the reasons I was confident to get into the trade, so I've already got the very strong identified resistance area. We already had the signal, however, it has broken out of the downtrend and it has just made a rally up. Now, one of the reasons I was happy to get in is something called reversion to the mean. So let me just pop this on the screen. So first thing is it was a scalping move. It's often less than one-to-one risk to reward, and very often when you're scalping, it will be a relatively quick trade. Now, reversion to the mean. It's one of the reasons I was happy to get into this trade, and the reason for it is, or what it is basically when the market suddenly makes a very, very strong move in comparison to recent price action. What it is doing is it is breaking away from the mean. So it's breaking away from the average price levels. What you can see when you look at a market is very, very often, if you look at lots of the candlesticks, the bodies, the highs to the lows will often be fairly similar in size. It's because the amount of money being traded through the market is often very, very similar through the trading day. Now, when you see a very fast move like this, what it's doing is it's breaking away from that average. So if you take a moving average, for example, right here, you can see the market all day has been trading very, very nicely with this moving average, and then all of a sudden it breaks away from the moving average. It pulls away from that moving average. Now, markets, contrary to what a lot of people believe, they like to be fairly disciplined. They like to do things in a repetitive way. And they like rules. They like things like trading along the mean. So when it breaks away like this, what you will very often see is the market then returning to the mean. That's what I was expecting. Now, what I should also point out actually is there's nothing to say that this market wouldn't have then kept rallying all the way up, pulling massively away from the mean before that correction came in. You don't just want to attempt to trade a market as it breaks away from, say, a moving average or from, say, the mean price that it has been trading at. That is a recipe for disaster. You have to have the plan in your trading plan. Everything you do on the charts, you should have a trading plan in place for what you are doing. For me, I had the key resistance level which meant it's one of the top zones I was watching for the day, with a very high probability of seeing reactions at the zone. Market pushed up into it. I then got the signal. The third level of confluence for me in this trade, I always like to have 2 to 3 confluences minimum. Third level of confluence for me was a reversion to the mean. I knew it was likely this market was going to break back down toward the average price. That's what it did. Market came down. I then knew very, very likely if we are moving into an uptrend, the market will come down and retest the previous swing high, which is exactly what it did. You can see right here, and you can see it's pushed up a tiny little bit from that level now. So that was the reasoning for the trade. As mentioned, it was a shorter term move. So it was a type of counter trend trade. It was a type of scalping. Around about 0.6, 0.7% made on the trade. Very nice trade, very simple trade. I'll need to check the profit and loss to get the exact figure. As always, what I always say is when you're trading on lower time frames, I don't ever trade by the ideology that you should always have a blind risk to reward ratio on your trades. Higher time frames, absolutely fine, because you can't sit at the screen. Lower time frames, it does not make sense to me. Just my personal preference, I should mention. But if you can read a market, if you know what the market is telling you, just blindly getting into trades and then just sitting on your hands, waiting for it to go to 1 to 2, 1 to 3, or stop you out, it just doesn't make sense to me. Because for me, that was a clear exit at that point. But it was also a clear trade for the confluences that lined up, and 0.6, 0.7% into the account very, very quickly. But as always, also it should be part of your trading plan. It shouldn't just be trades you take blindly because you think the market is going to make a little move. It should all line up with your trading plan. Your trading plan should take care of everything for you. There you go. You can see the market is now popping up. So it was a very good exit. Okay, guys. As always, I hope that was helpful. I hope you're all having a great first week back on the markets. I am James Orr, and thank you.